my son engages in nonsense money, right? My son is 8 years old, and I've offered him money in the form of cash, and he's turned down all attempts at it. He says all he wants is Robux, which isn't even a cryptocurrency. It is nonsense.
Hi, welcome to all our investors on iFAST TV. My name is JP. I'm from the iFAST team, and today I have two very special guests with me. So, firstly, I have Christopher.
Hi.
From Dr. 𝗪𝘰𝘃. So, he's a trainer at Dr. 𝗪𝘰𝘃, and he's written a few books on personal finance. And on my left, I have 𝗪𝘆𝘀, who is from our iFAST research team, a familiar face to some of you who have been following iFAST TV videos. So I'm very happy to have both of you with me today. And today the topic is very specifically on the launch of the spot Bitcoin ETFs that happened in early January 2024. So as some of you may have read in the news, 11 spot Bitcoin ETFs were launched in early January after approval from the US SEC. So basically the SEC is in charge of regulating the stock markets in the US. So many investors are familiar with ETFs today because we've written quite a bit of research articles on ETFs, which give exposure to different sectors around the world, like the US market with the S&P 500, or even the Singapore market with SDI and the Singapore REIT sector as well. But today we just wanted to shine the spotlight on spot Bitcoin ETFs very specifically and find out more about how they work and also the basics of it and also the risk of it. So I'll start with Chris. So just taking a step back. So what is spot Bitcoin ETFs?
Okay, so based on what little I know about spot ETFs, in the past, if you were to buy the Grayscale Bitcoin Trust ETF, you're actually getting some kind of derivative. Right, could be a future, and it is structured to mirror the movements in Bitcoin. You're not getting the real thing. After the SEC approval, you are actually getting the real thing. You're getting Bitcoin when you actually buy that particular ETF, right? So I think that's something which the community has been trying to fight for quite a while. It involved probably an army of lawyers, and I think it's a fairly major victory for the cryptocurrency people.
Yes, it's been something that, as you say, has been happening in the background for many years.
Right.
Yeah. And finally, the SEC approved. But at the same time, they approved the listing of these ETFs, but they also were at pains to come out to say, I don't endorse them. And obviously, some investors who have not been following all the drama for the last few years may be a bit puzzled. Why are you approving it to be launched if you don't endorse it? So maybe I'll just get 𝗪𝘆𝘀 to maybe talk a bit about why this situation of launching it but not endorsing it.
Right, I think there's a lot of reasons why SEC do not endorse these Bitcoin ETFs. And of course here at iFAST, I think we are also actually negative on this asset class in general. And we think it's a grateful theory based on just speculation and just gambling and trading. But I think the main 3 points, I think the first point would be that it has no intrinsic value. Because when you buy into equities, you're actually owning a business that have earnings power as well as a cash flow. But Bitcoin or cryptocurrencies in general, they do not actually have these earnings or cash flow. So there's no way to actually give an intrinsic value to these products. And I think secondly, I think a lot of crypto bulls have always said Bitcoin can be a global currency. But I think there are two main points why it can't be a currency. One would be the high volatility. So I think merchants or even consumers will not want to really transact goods and services using Bitcoin. And I think another reason why it can't be a currency would be the low transaction speed. Visa can process up to 24,000 transactions in a second, but Bitcoin roughly about 7 transactions maximum per second. And of course, lastly, I think one of the main negative point why is that this space is filled with fraud. The collapse of FTX, of course, and also one of the hedge funds in Singapore, 𝗪𝗪𝘃𝗃 Capital. And of course, everyone knows, I think a lot of Singaporeans have been affected by this, the collapse of the Terra Luna stablecoin ecosystem.
Yeah, that's right. A lot of negative news in the last, couple of years. But Chris, I need to bring you in because you are a trainer, not just on cryptos, but also, of course, on other asset classes, including dividend investing and so on. So what are your views on this development, with the Bitcoin ETFs, being launched and so on?
Okay, now I'm generally not as bullish on cryptocurrency as the crypto boys in 2021, all right? But as someone who writes computer programs, who looks at momentum, who looks at backtested results, it would be a mistake not to put 1% of your portfolio into Bitcoin at the very least, right? We're talking about returns of 66% annualized, right? With a standard deviation about 5 to 7 times higher than the rest of the markets. It's a very volatile instrument, but it is so unique that it can be considered its own asset class, right? Now whether it is useful as an underlying business, I have only one thing to say. I've recently came back from Istanbul, Turkey. And in societies like this, where your own currency might not be well managed by your own central bank, you're looking at inflation rates, double digits, triple digits every year. Bitcoin is actually something that is like a savior to the common people because I can convert my fiat currency into Bitcoin temporarily to deal with the inflation around me. So we can't say that there is really no use. In various societies where central banks, maybe they abuse their power or they wish to align themselves with politicians, there is actually a use case for cryptocurrency. So I wouldn't say that it doesn't serve a purpose. Now, does that give, for example, cryptocurrency boys the right to dance, enjoy, and put 20 to 30% of their portfolio into various Bitcoins or worse, altcoins? I don't think that's the case. I don't think that's the case, right? So I would say that I would land somewhere between the house view as well as the view of the cryptocurrency boys, but it's something that we cannot ignore. And 1% is a very prudent kind of choice, right? So puts me somewhere in the middle.
Yes. Chris, on the 1%, I'm also curious. So why that number? Because if let's say if you're very optimistic on the outlook for this currency or this product, or in this case Bitcoin, like ETFs, right? Then shouldn't it be a larger weightage in your mind? How do you tell your students in the courses?
Okay, so in my courses we have computer programs to tell you how much to put into the Bitcoin. So right now the algorithm is flagging that you should put in 6%, but that's 40% of the overall portfolio. So it's actually about 2.4%, right? But we have what they call a systemic way to allocate our currency based on momentum and trend following, right? So we have a system of doing that. We can go beyond 1%. But otherwise, I don't think it is prudent if you are a retail investor to go beyond 1%, right? Why 1%? Because maybe if you were to follow first principles in finance, right? You've got an efficient frontier that a lot of people in finance you learn.
Yes.
The introduction of a new asset class expands the efficient frontier and allows you to put a little bit, just to capture a little bit of that upside. So that's one way of looking at it. Another way to explain this to a layman is that if you really believe that cryptocurrency is going to the moon, it would make you 100 times what your capital, the allocation of your capital, then you really shouldn't put it above 1%. Because if it goes up 10 times, you're still making 10% of your portfolio. Why are you risking so much of your money on something that is purportedly new, right? So I've read several economists and academics have attempted to grapple with this problem. And generally, it's really exciting. But I think 1% is good enough. And even if you agree with the crypto boys, you shouldn't put more than 1%, because if it's such a great thing, 1% is enough. Why do you want more?
Yeah. I mean, cryptos is such a big universe. There are so many kind of cryptocurrencies. Bitcoin is just one of them. Probably the most famous of it.
Yeah, the most famous.
And which is also why I guess with the regulator in the US looking at the launch of a Bitcoin ETF or a crypto ETF, they started with Bitcoin ETFs first. And there are rumors, of course, that there could be other types of ETFs that will be launched. In future. But let's go back to just the basics again of Bitcoin ETF. In terms of custody, right? I think some of the investors are also concerned that that's going to be residing mostly with Coinbase. So I mean, in layman terms, how do you explain that to an investor who is just reading about it? How is that a red flag?
I don't really see it as a red flag because I spent the greater part of my time when I used to have a crypto course before the Terra collapse. I had to teach students how to secure the Bitcoins, right? It's not just Bitcoins, the Ether. It involves either putting your money into a centralized exchange, and we know how unsafe that is these days, right? It also involves putting your money into like a Chrome extension like MetaMask, which runs into a problem when you have to migrate from one PC to another PC. And by students have to do all that, right? And when you want to manage it on your own, we're dealing with things like 24-word passphrases. And each individual were to manage it on their own. Where do you put the passphrase? Do you put it in the cloud? Yeah. So for questions like this, they make the investment in cryptocurrency very, very complicated. And I actually believe that if you were to manage it on your own, it's probably not as secure as relying on Coinbase. I mean, I could be proven wrong. But for me, the reason why I'm really happy about the spot ETF is all I needed to do, open a custodian account into any of the cheap brokerages out there, put my money into the ETF. And I think that's so much easier and to manage, right? Of course, given how dynamic the situation is, if somebody can hack Coinbase, if somebody can steal the passphrase and all that, then you will see the ecosystem collapse really quickly as well. But is it more secure when I was managing my crypto? I don't think so. Yeah, I don't think so. I've gone through quite a number of different ways to secure my crypto, and I personally don't like it. Right, I spent 14 years in IT, and I don't really like it. But I can imagine why younger people just like doing this, because it's something that they can handle on their own.
It's almost like you need to have a full-time cybersecurity analyst, in your course as well, teaching the students.
Very much so. And what begins as one or two slides would eventually become an entire chapter to teach. And I've gone through that process.
Maybe I'll just go back to a point that both of you raised, which is, as a medium of exchange or as a store of value, this is what we expect of currencies, right? I mean, we learned that in school, in finance and so on. But even to a layman, that's our normal expectation. We don't want to have a currency that fluctuates wildly on a day-to-day basis. If I go and use that currency to buy something in the shop today, I expect it to buy the same thing tomorrow and not just half of it tomorrow. So I think you mentioned the case of Turkey. I think there are also other case studies like your El Salvador trying to use it as a store of value. But these are all relatively, I mean, in the case of El Salvador, especially smaller economies, Turkey relatively larger, I would assume. But is that actually a big negative against the case for crypto? I mean, 𝗏𝗏, what do you think? Because there are people who are saying that, if it doesn't even fulfill the basic function of a medium of exchange, then we shouldn't be looking even to invest anything into this asset class.
Right. I think besides the point of being a currency, I think a lot of investors of crypto pools today, they think that it's a hedge against inflation even, because the global liquidity it can be increasing. The central banks are controlling printing money, but the supply of Bitcoin itself is actually fixed. So technically, if you own Bitcoin and you do not increase your allocation, you are also not being diluted over a long period of time. So I think in that case, when the supply comes down or flatlines, especially with the Bitcoin halving coming up, where the number of Bitcoins to be mined a day will be kind of half, or we need more hash rate to also just mine this Bitcoin. So as the supply comes down, the demand might catch up. So I think in some case, investors or traders, they think that this supply-demand dynamics might increase the value of Bitcoin. And I think also in society, humans are also kind of herd mentality. So if we believe that this Bitcoin is useful, or everyone thinks that it will go in price or it's a store of value, I think some people might think that, hey, maybe just own a little bit of it. But once again, this is also based on hopes and belief and speculation. So there's no underlying value. So I think besides just currency and intrinsic value, I think a positive point could be people believing, if everyone believes in this, is actually a viable asset.
Chris, what are your thoughts on people like famous people like Dr. Eugene Fama saying that Bitcoin is gonna implode because it's not being widely used as a medium of exchange. So until that day happens, he thinks that that's gonna be the death knell of Bitcoin. So what do you have to say to people like that?
I think you shouldn't put your faith in economics 101. I know a lot. I never took economics as an A-level subject. I have only two very, very simple stories to share. The first is I made a lot of money in 2008 when I bought a weekend car. The COE value just went off the roof. And then when we sold it, we made some money out of it, right? No rhyme or reason, right? The second story is my son engages in nonsense money, right? My son is 8 years old and I've offered him money in the form of cash and he's turned down all attempts at it. He says all he wants is Robux, which isn't even a cryptocurrency. It is nonsense. And there is an economy involving Robux among the kids in the condominium area. So don't underestimate the ability for young people to find value in something. And I'm 50 years old. I'm not considered young anymore. But you really should listen to what young people say, what is valuable for them, right? And a lot of it is also tied to maybe people not having so much faith in a meritocracy, not having so much faith in capitalism that can drive the adoption of these newfangled technologies, right? I think I would say that we should be open-minded and always have the quantitative tools to exploit when a trend arises. And the trend could come from anywhere. We really won't be able to tell. Yeah.
Interesting about the condo story.
I think there are very many economies that it could be income currency or even Pokemon cards, back in during COVID.
I was into Magic the Gathering in the 1990s. So so I've handled the Power 9. I don't know whether you heard of it. These are Magic cards. They're worth a 6-digit sum today. And I guess that's how the world works.
So I think as long as you believe that money to be made, I think people just flock there.
And I guess it's where you have that pool of people increasingly thinking that way. But that's also part of your greater fool theory as well. So it has to withstand that the pressure of whether you deserve to last for many years.
That's right.
Because when you're investing in Bitcoin, right, Chris? I mean, what kind of time frame are you looking at? Because you're not looking at it for the next few months, right?
So my algorithms reset the momentum numbers every month. So it is a number of months.
Okay.
But when we talk about a trend following algorithm, it is in fact the greater fool theory, because you buy when you catch a trend, and if your algorithm catches it earlier on, you sell it to someone else who's willing to pay more for it. The question whether he's a fool, of course, it's up to anyone's guess, because he might be running a different algorithm. He might be running a mean reversion algorithm. And that he has a different view of the markets, right? But markets work because for every buyer, you need a seller. But we really don't know who's a fool. I mean, the person running the algorithm could be the ultimate fool. At the end of the day, there is a collapse of the ecosystem, right? But the problem with the finance is that sometimes there is the philosophy of words getting into the picture. If the word is pejorative or negative, you automatically try to you attach something negative or pejorative to a particular asset class. Which is why I surrendered myself completely to computer code. So that we could remove these the mindset.
Also, lack of emotions.
Lack of emotions, right? So you say greater fool theory, I say, well, I do trend following, so I am following it.
Yes. Chris, it's interesting because actually you've written a few personal finance books, and you advocate as well for ways to produce passive income, or what we call income investing.
That's right.
You also have a course on early retirement.
Yes.
So I would assume that those would be based on the foundation of long-term investing, and so on. But the Bitcoin investing coding that you're looking at seems so entirely different, right?
Yes.
So how do you sell the messages to an investor?
Okay, so I run a double life at the moment. I have been a dividends investor in my 20s, and I attained financial independence by buying dividend stocks. So it is what I would say the house would probably agree with, right? Buying good businesses that generate free cash flow, and then living off this free cash flow until it gets you financially independent, right? But over the past, I think 2 to 3 years, especially in the year 2022, we are looking at really massive drawdowns for the dividend strategy. And real estate investment trusts have not been done well, has not been doing well when interest rates have gone up, right? And so that sort of begs the question, if you look at investment from a completely different perspective, if you want to look at it from for example, this is the idea of all-weather investing popularized by Ray Dalio and his hedge funds. Then you have to approach investment from a totally different perspective. You want to look at things like risk parity. You want to create some mathematical models to see where they can make money out of it. And so, because I have an engineering background, I began to code and I began to build these algorithms from ground up. And I've discovered a different world out there, right? So I am taking my dividends and I'm farming part of it into these newfangled strategies. And of course, the whole point of all this is for personal growth, right? You post financial independence when you're living with your dividends. You can't just surrender yourself and say that, well, I'm just going to do gardening for the rest of my life, right? Finance is a very, very exciting subject. And I love IT, I love finance, why not just marry the two of them together and we see what we can do. So I live that double life, and if you want me to talk about like dividends, free cash flow, REITs, getting rental payouts,
still in your element. Yes.
Yeah, but now we are really getting into really exciting territory. What young people play with? Are the cryptocurrency boys correct? What is their view on altcoins? Is it fraud? And I think these two perspectives are useful when we look at the business of making money.
Okay. Maybe let's go back to just another aspect of the spot Bitcoin ETFs, because they are listed during the US trading hours, right?
That's
so
right.
I think one of the questions that comes up is, how do you reconcile that versus the broader crypto market where things are just moving almost like 24/7?
Right? Yeah. So for me, I think we really don't need to do this 24/7. I would go through my day, and then at 10:30 p.m. at night, I would settle down, I would get into my desktop, and then we will see how the ETFs are doing right there and then. We don't reposition on frequently on the daily basis, we reposition on a monthly basis, so activity only happens on the first of every month. So the ETFs work perfectly for us. And of course, naturally, we are only dealing with Bitcoin. There's only one ETF that is available. There is, of course, 𝗍𝗃, which is the Ethereum. It is a non-spot ETF. So I suppose it's running on the old model of derivatives. And I'm studying that very closely right now. Actually, every single model that I ran has said that you should put a position in it. And it should be as high as your Bitcoin position. But I'm more concerned about the repercussions when the cryptocurrency crashes next. And we know there's going to be booms, there's going to be busts, right? But I'm quietly confident because the 2021 loudmouth cryptocurrency boys who go on Tinder dates and they brag about their cryptocurrency portfolios, these guys are not around anymore. I would generally be concerned when a particular asset class becomes a measurement of your own manhood, and we know that leads to tragedy. Right? And for a certain point of time, equities were in that space where people talk about Tesla. And Tesla has a very charismatic CEO, and people brag about owning Tesla when they go on a date. Of course, it bores the hell out of these women, and they complain about it. And I love reading about it. Right? I love reading about Tinder because I never had Tinder when I was dating. I dated the old-fashioned way. And so I'm actually cautiously optimistic. I think that when a lot of guys and these guys, you know who their gurus are. I follow them too, right? I follow Andrew Tate, right? I mean, when these guys agree on something, then you see a bubble forming. Momentum will start going up, and once it exceeds a particular point of time, you need to be very concerned because you get whiplash when the momentum starts to reverse itself. But I'm not seeing it right now. I'm seeing, in fact, a lot of unhappiness, a lot of wounded egos on the various finance chats, and that is when normally I'm a lot more optimistic when I see this because people are more calm. They're more deliberate when they do their financial planning, and that should be the way things are.
So the signs of euphoria or lesser lah. You don't see so much of that.
I'm not seeing tulip mania.
I think when you see like the barber or even the taxi driver talking about some of these products, then maybe that's euphoria again.
Okay, I think we've covered quite a bit on Bitcoin ETFs. We can go on for quite long with all your insights that you have to share. Thanks so much for that. But any final thoughts, Chris? Yeah, and I'll move on to Poland next.
Okay, for me, I just like to say that finance is really dynamic. Keep an open mind. You can pick up your first principles, economics 101. That's good because it will give you a framework, right? And then with that framework, a little bit of data science, you could deal with whatever new comes along, right? And I hope I've presented a neutral case on cryptocurrency, right? Not too bullish, not too bearish, but I think 1% is a very reasonable number. Yeah, that's all I have to say.
Okay, thanks, Chris. And Paulun?
Right, so of course, we've given the neutral view given by Chris. I think I will just present a more negative view. Here at iFAST, I think we are definitely looking at investing in assets that have fundamental value, intrinsic value, that generates cash flow and earnings. So the problem with Bitcoin or cryptocurrencies in general would be the lack of this. So you're not actually investing in the proper business or something that gives you earnings or cash flow. And I think if people really want to just buy into these products, they can go ahead, but I think you have to be very cautious because essentially it's trading, speculating, or gambling. Yeah, so be careful. You may be the last one holding the bag. Who knows?
Yes, I guess at iFAST we've been writing quite a bit about it. In fact, if investors ask us how much they should have, we would say don't even have any exposure.
Yep.
But I think what we wanted to do today is also to hear from Chris because, like I said, Chris is also not just into Bitcoin investing and looking at the merits or the cons of it, but also looking at the different asset classes. So I think those perspectives have been pretty useful for us to understand. Yeah. So thank you to both of you.
Thank you very
We're
much.
happy to have
Thank
both of
you.
you on iFAST TV. Yeah. See you soon.